I assemble the smartest people I can think of or reach out to carry that conversation. And that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Okay, guys, Jay Martin here, investor and CEO of Cambridge House. And I'm joined right now by Aidan Mills, the CEO of Northstar Clean Technologies. Aidan, how you doing?
Good, Jay. How are you?
I'm really good. I'm excited to have you on the show and dive into this story for my audience. So for full disclosure, I'm an investor. I wrote a check into this company and, I'll explain why in a minute here. I think if anybody like me is looking for opportunities to invest in the renewable economy, the circular economy, there's a lot of tried and tested narratives when we look at battery technology and the metals required and all that stuff. But there's some very unique business models emerging on the back of this trend. And Northstar is one. And so I want to dive into the details with you today, Aidan. For anybody who's not familiar with who you are and what you do and why this business exists, why don't we start right at the top? Who is Northstar Clean Technologies and what do you guys do?
Okay, so Northstar Clean Technologies is a company that essentially takes asphalt shingle tiles, splits them up into their individual component parts, and sells the sales quality products out the back end. And so I'll go right up to 10,000 foot and say, look, what is an asphalt shingle tile and how does, obviously, so it's made up of three component parts. So 50% of a tile is sand, 25% is fiber. The older tiles, the fiber is made of paper. The new ones, it's made of fiberglass. And 25% is oil, so asphalt oil. And so if you think about it, so what we do is we essentially have a process, and it's a proprietary process. So literally nobody else in the world is doing this. And we take the shingle tile, it gets ground up and comes through our process, and out the back end drops sand that's sales quality, fiber that's sales quality, and asphalt that's sales quality. And we send nothing back to landfill. So it's not one of these processes and technologies that has a kind of a nasty leftover. Nothing goes back to landfill. We repurpose it all. And so and the thing that's interesting about it, and we'll touch as we go forward, is this is literally ready to deliver now. So I'm not asking investors to do a 2030 blue hydrogen emerging technology play. This is literally ready to go.
Yeah, you're in your facility right now in Delta, in British Columbia. Yeah. Okay.
Exactly.
So backing up a little bit about you, because your background's from the energy sector, if I'm correct, BP, right? Husky for many, many years. In addition, on the banking side, you were with Goldman Sachs. So Give us the highlight reel of your background prior to joining Northstar.
Well, so look, I worked, so as you can clearly tell by the accent, I'm not from Delta in British Columbia. So originally from Belfast, went to uni in Edinburgh, and an engineer by degree. So I worked for BP for 20 years. About 10 of that was in on the engineering side. So, operations and engineering. Then I moved across onto the commercial side and worked on essentially commodity trading. So origination for the commodity trading divisions. I did that in the UK. I did that as part of the BP Amoco merger, where we created a global NGLs business. Then I came across to Chicago to run origination for North and South America. And actually, as we think about Northstar and the products that come out the back end, one of those is asphalt. And so, long-term negotiating long-term commodity contracts for new businesses was exactly what I did at BP. Then moved to Canada, so ran Western Canada, kind of trading, and then left BP, stayed in Canada, so now a Canadian citizen, which is good. So thank you for that on behalf of the country. And then worked for Husky, and also worked for Goldman for a couple of years. I was the managing director and co-head for North America for commodity sales. So working with a number of the big clients that we had with respect to risk management and hedging and all that kind of good stuff with the energy markets. And then lastly, worked at Meg as well, doing the same kind of thing in terms of just new market development. So lots of engineering background, lots of marketing, trading, and also kind of developing businesses into new markets. And of course, that's exactly critical to what we're doing here today.
Okay, thanks for that. Now, let's jump into the problem a little bit. So I and my viewers can understand exactly why you exist and why you're providing a solution and what you're providing a solution to. And so, we're talking about asphalt shingles, right? This is a roofing product, right? So to give people some scale, and the numbers better than me, Aiden, so correct me if I'm wrong, in the US, something like 12 million tons of asphalt shingles are shipped to a landfill every single year. Is that about right?
Right. And so the amount that comes off a roof is about 13 million tons, but 1 million of it is. So if your viewers are like, well, what is this asphalt shingle thing? And you Google recycled asphalt shingle, there's a recycled asphalt shingle manufacturer almost in every single city. And what they're doing is they're taking the 1 million of the 13 million tons, grinding it up and putting it into roads. So putting it into asphalt paving. But that's a restricted number. Only 2 to 3% can actually go into roads, and the rest has to go to landfill. And when you think about the number of 12 million tons, people are like, well, is that a lot? So if you think about the asphalt, oil in that shingle is 25%. That's 3 million tons of oil. 3 million tons of oil is equivalent to 18.5 million barrels of oil, which is exactly the same as the US's production in one day. So if you think on the 1st of January, US production, all of the US's oil production pours into landfill, that's how much it is per year going into landfill. And so that's the problem that we're here to solve. I mean, look, as a CEO, I'm always saying, we fit with the ESG environment. We've got huge commercial upside. We'll talk about that. We've got a great capital structure, et cetera. But that's what we're here to do, is to stop that problem of, in the US, it's 12 million tons. In Canada, it's 1.5.
In Canada, it's 1.5. And this is where you're starting. So, essentially a case study, right, to prove the business functions. You're in Vancouver, your facility's in Delta, just outside of Vancouver, Canada. Right. And the numbers you're looking at in Vancouver are something like 70,000 tons annually. Yes. Same process, right? Currently shipped to a landfill. That's the idea.
Exactly. And so the business model for us is to say, okay, is to go to and so the business model on the front end of that is really good because we literally get paid to take the asphalt in. So if you drive today, those 70,000 tons that's going to the Metro Vancouver landfill, which is literally not even 10 kilometers from where our site is, you get charged $130 a ton. So that's the tipping fee for an asphalt shingle ton into the Vancouver landfill. What we'll do is when we start to take those in first quarter next year, we'll actually we'll charge $20 less, so that the roofers or the aggregators, etc., come here, so they turn right instead of left to the Vancouver landfill, and we charge them $110 as an example to drop it off here, and that's the first part of the business model, is we actually get paid for the tipping fee on the front end of the plant.
Right. And then obviously selling the end product out the back end. So,
agreed.
And back to that, we're talking about sand, fiber, and asphalt out the back end. So I know your goal to prove the business works in Vancouver is to achieve steady state production. And so just to make sure I understand what that means no surplus of asphalt once you're at steady state production, no surplus of asphalt waste. Asphalt shingle waste, is that what I understand?
Well, I mean, so look, we did commissioning runs a couple of weeks ago. You and I, we've chatted about this before, but we did the commissioning runs, and the commissioning runs basically proves that the technology works. So you put an asphalt shingle in the front end, and what comes out the back? Well, out the back came, and so the technology here has been developed over 5 to 10 years. So it's not like this was the first time it had ever run, but it's basically saying, okay, look, what are we seeing coming out the back end of the facility? So that was sand, fiber, and oil. So we know the technology works. Steady state to me is where you're running every day for 6 to 8 hours a day, maybe stretching up to 10 hours a day, and you're running the facility 5 days a week. So we've hired the operations team here now, and commissioning also is really important because it tells you, well, look, if you want to step this up to 8 hours a day, we're going to have to look at this process to see how well that's working. Or there's areas of the plant where you're like, well, we could improve a bit of the water quality, so how do we do that? So commissioning shows you what you have to do to move to steady state. And for me, steady state is, it's less about exactly what the volume is. It's more about, are we running steady, 8 hours a day, 5 days a week. Got it.
Okay. So that's the equilibrium we're looking for within the facility. Now, so Aiden, the goal there, I think, is like Q4, Q1, right? So it's near term, right? So prove that out, right?
Agree.
Okay.
Yeah. So Q1, look, if we can, as always, the sooner, I'm the CEO, so the sooner the better, of course. But we have to be, this is an engineering process and it's an operation process. So you have to be, you got to do it in the right way. So look, I'm very confident that we will have this to steady state production in Q1. And then, look, we've said, and it'll get to, significant commercial production, in second half. Look, that we could accelerate that back, and that could happen in Q1 as well. So I think we've got two steps. So we've got the steady state step, and then I would describe it as the debottlenecking step. I think, the capacity of this plant, in my opinion, is kind of about 50 to 100 tons per day. When we move to steady state, we'll be, at the lower of that range, maybe 40 or 50 tons a day. When we debottleneck it, later on in Q1, I think we will be, we could be at 75 or 80 tons a day. We'll be closer to the top end of the range. But that's the sort of capacity we're thinking about with respect to the plant in Delta.
Okay. So, thanks for that. I think it's a good explanation of what the business is. Now, first of all, like from a values perspective and as a human being, I love the business, right? Now, the investor in me wants to know, how am I going to make money? So let's talk about those trigger points. Let's talk about potential commercial production and upside. Why should an investor have a look at you guys right now? That's the question.
Right. Well, so I think, the one reason that they should look at us right now is not only the good feel from it, but if you think, a couple of reasons. So the commercial model, in my opinion, has a lot of upside. The engineering, and we'll chat about this in a little bit, but so we've kicked off an engineering process with BBA, who's the engineer who's helping us do the design for the large scale plant or the scale up plant from this facility here. So the scale up plant from this facility here should be capable of doing about 150 to 200 tons a day. When we design that, literally that footprint, that plant, we will literally be able to roll that out all across North America. If we get to a market, for example, Toronto is one of our destination markets. If we get to a market that has got, that's like 4 times the size of Vancouver, we don't need to build a plant that's 4 times the size and all the scale up risk that involves. We just put 4 plants in that city. And literally this can be deployed, one plant for a city of over 1 million people. Toronto's got, 4 million or 5 million. So you could put 4 plants there. LA, you could put 10 plants in LA. So anywhere where there's 1 million people, there's enough shingles coming off roofs to put one of these facilities. And the real advantage of it is, so you get paid the tipping fee, out the back end, you get the 3 products. And now we know, because we've just had the CO2 analysis verified. If you looked at the Vancouver plant, for example, each location is different, but if you look at the Vancouver plant, the asphalt coming out the back end, the carbon intensity of the asphalt barrel that comes out the back end of the plant is 38% of a virgin barrel of production. So the carbon intensity is like 62% lower from our production at this facility than it is for a normal barrel of asphalt that people get in, that Lafarge would bring in to pave the roads there. So on top of all of this, there's carbon credit. Now, can you monetize carbon credits? It depends on the jurisdiction and, et cetera, et cetera, et cetera. But you can absolutely monetize green asphalt. So what this CO2 analysis proves is, not only are we stopping landfill, not only are we avoiding all of that kind of stuff that's going in, our production is greener than virgin production.
Okay. And so you mentioned BBA, correct? This is the engineering firm. And it's more of a partnership when you talk about it, because as you said, anywhere there's 1 million people, the facility becomes economic, right? That's what you're saying right now, based off the fact that current recycling and reusing processes with asphalt shingles are incredibly unsophisticated, to the tune of only utilizing 2 to 3% of the original material into asphalt. Is that correct?
Right, absolutely. And so ours can be used. Our barrel is literally exactly the same as a barrel that comes out of a refinery. It can be used in any. There's no additional processing. Now, it may need to be blended because of the hardness of the asphalt, and so. But in terms of a buyer of asphalt, it looks exactly the same. The only difference is, and on our discussions with contractual counterparties, is the only difference between a barrel of asphalt from a refinery and a barrel of asphalt that we have the only renewable barrel of asphalt in the whole of North America. Literally, this is the only green barrel that exists.
To the tune of a 62% decrease in carbon.
Right.
Yeah.
Now that's, and just to be fair though, that is a delta analysis. That's based on all the BC figures.
Sure.
It'll be different in Ontario and different in Calgary or whatever, because the way that you have to analyze it is different province by province.
Yeah. Okay. So the reason that's significant for anybody watching this, when I'm looking at an early stage opportunity, initially you have to tick at least 3 boxes, right? You got to trust the people, first of all, right? Before you let somebody have an adventure with your cash, do you trust their judgment and decision making? Do you trust that they're going to surround themselves with other great people? Do you trust they're going to have a plan C when plan A and B get compromised? Second, does the business make sense, right? And that's what we're diving into here today, right? Does the business make sense? But third, you want to know the macro environment to ensure there's a tailwind. That's just a personal thing. I don't want to be 10 years early on an idea, right? I prefer to be a year early. That's my preference, right? And so, we're all watching the carbon headlines right now, and it's going bonkers, right? And so, that's what got me so excited initially about this, Aiden, was like, holy crap, if I can find any way to play this narrative right now, at the investor in me wants to take part, right? The human in me loves the business model, right? The investor in me needs to see a few more things, right?
Well, and if you think about the amount of support that we're getting, so look, we have a plan to roll out, a good idea of where we would think the first 6 plants would be. So Calgary, 2 in the GTA, Calgary, Edmonton, so 2 in Alberta, and likely 2 in the Pacific Northwest as well, because we think, entering the US market is a really important thing to do. And I'm telling you, Jay, you would not believe the conversations we've been having with government. So we've got Wellington DuPont, who are our government and public affairs advisor based in Ottawa. We've been engaging at the federal level, at the provincial level, and the municipal level, and the potential support for this is huge. So when we think about the capital structure, look, end of last quarter, $10 million in the bank, right? So of cash. Of that, about 0.9 was debt, and that was kind of a revolver type support. So it wasn't term debt. But as we think about that capital structure, the amount that had no government money in it at all, literally none. And so the discussion with the governments, this is right down the fairway of Biden's green infrastructure plan and Trudeau and the province's, carbon support, reducing carbon support, because not only do we spend $10 million and build a plant, we employ people, we have a lower carbon footprint than virgin production, and we're avoiding landfill. So from a government, political and government support perspective, we're getting huge encouragement. Now, we've only started the applications. The first government application, first torpedo went into the water this week. So that's the first one. But people have said to us, this fits exactly with what we're trying to do from a federal and provincial perspective. And then the second point in that is, so that model doesn't have any term debt in it. And so if you think about a model whereby you have input coming into a plant that you're fairly guaranteed on, and you have output that has where we have contractual relationships with people like Lafarge to pick up the asphalt. I mean, you can debt fund that without any green, you can normally debt fund that with just normal debt. But green debt, I mean, we think this is hugely advantaged. And so we've also kicked off the conversations on green debt. So if you sit back and you kind of go, look, as an equity investor, what upside do you have for me on the commercial model? Well, we've got, contracts front and back. And now we've got government support coming into that model, non-dilutive, and debt. So to me, that's a great structure.
Okay, now I want to wrap this up, and where I want to wrap it up is, we've spoken to a new population of prospective shareholders, maybe people who are curious, looking for an opportunity like this. You're on the watch list. News alerts are turned on, Aidan. Give me one or two trigger points that we can look forward to in the near term being a year, right? 6 months to a year. What are the one or two trigger points that we could expect from you?
Look, if I was kind of writing my own report card and saying, all right, what do you have to deliver? And then investors should think exactly the same way as I do, which is, so we need to deliver steady state production. So we need to be able to say, here's the plant working, here's the trucks coming to pick up the sand, here's the trucks coming to pick up the asphalt, and so steady state production at this facility, because that demonstrates that the technology is running steadily. So that's good. I think the second thing is the announcements of where we're going to build the first couple of expansion plants. So that's when it goes from look, this will be cash flow positive, but that's when it goes from a steady state, almost pilot plant, that's being commercialized, to the proper plant goes down, because this is the plant we're going to roll out all the way across North America. So I would watch for, okay, what's the plan? Have they got the permit? When does construction start? And when are they going to be ready? Now, we think that can be done within, that we should have the plant built and be commissioning this time next year. That's the current thinking, but that's what I would be waiting for. Like, when's this thing running steadily, and when are the new ones rolling out?
When is this thing running steadily? That's steady state production. Let's say Q1 2022, right? We want to see that occur. Yeah. And, we get that vote of confidence, then we're looking for the expansion facilities.
Exactly. And so the expansion facilities look likely first one in Calgary. That's what we're currently planning. And also, I think, and from a non-dilutive funding perspective, what is the announcement around debt support, and what is the announcement around government support? Because I think we will have, good. That's also part of the commercial model that we envisage to really lever on the equity side.
Okay, look, I want to bring you back when we've hit that steady state production. You guys know how I do it. I have an entrepreneur on, and then we bring him back and say, did you do what you said you were going to do? So Aiden, I look forward to that day. And thanks so much for making the time and coming on the show, getting in front of my audience, letting me pick apart the opportunity a little bit and understand it better myself. So thanks so much.
Jay, great. Thanks for the time, and good to see you. Look forward to catching up again in Q1.
Okay guys, 3 last things. First, if you enjoy my interviews and would like a bit more, you can subscribe to my Friday newsletter. It's free, and the comment to subscribe is right beneath this video in that pinned comment. In this newsletter, I share my key lessons learned, takeaways, and any actions that I might be taking in the market as a consequence of what I've learned on the show. Second, when I started a YouTube channel, I never anticipated generating any advertising revenue, but coincidentally, I do now, which is awesome. And so what I've decided to do is donate this to an organization that is very close to my heart called Zero Ceiling. Their mission is to end youth homelessness. The way they do this is by providing young people experiencing homelessness with supportive housing, employment, professional support, life skills, and outdoor adventure. Because often young people in urban centers with no resources will never get the opportunity to experience wild places, nature that can be so transformational, and absolutely was for me. Third, if you prefer to listen to my content, you can now find us wherever you listen to podcasts. Just search for The Jay Martin Show.